Well, good morning and good afternoon, depending on where you're at. This is Ed Meisegland. I'm the managing partner of Indiana Business Advisors. We're a business brokerage here, locally located here in central Indiana, but we have locations in Fort Wayne, South Bend, Lafayette, and we've got probably the best team that I think we've ever assembled in the 40 years of servicing all kinds of different businesses, predominantly manufacturing, service, and distribution businesses. So today we're going to talk about market. What's the appetite for the market? I have been curating the just market data that I've found, and we thought it would be good if we sit down and visit about what it is, what the market is for the for potentially selling a business. Is now a good time to exit? Is now the time for the buyers? None of us have ever experienced what we're going through, so that's what we're going to talk about today. And so data has been filtering in, and we've like I said, we've curated it down and synthesized it, so hopefully we can be a source for helping you make your decisions. So a few housekeeping things. Of course, all our recording will be released shortly after I get done doing this presentation. After that, the slide deck will be available, is my understanding, through a PDF. And if you have any questions, over to I believe your right-hand side, there's a little chat box. Chelsea will be manning it, and she'll let me know if we have any any questions. So as we go through this, if there's any, like I said, if there's any kind of technical problems on my end for whatever reason, we'll record it and we'll absolutely get this out to everybody. All right, so let's get started. Maybe. So the agenda, we're going to look at the outlook, valuation, COVID impact, and what buyers are looking for based on the data that we've received thus far. So this is the big one: 39% drop in the second quarter. I'm not really certain you should be concerned about it. I mean, it seems obvious that, of course, everybody's pumping the brakes when the entire economy is facing what we face. So yeah, second quarter dropped. And again, I think it's just a matter of letting the dust settle and moving forward into Q3 and Q4. So, but that's what the data says. We're down 39% in total transactions done. Now in our shop, we haven't seen that. We've been business as usual, and we certainly have been blessed that we've been able to do that. I think out of all the transactions, we maybe have two that are on the fence that are as a result of this pandemic. Okay, so moving on. BizBuySell. BizBuySell is one of the largest organizations that we use as an advertising vehicle to promote some of our businesses, as in addition to our newsletter that I think it goes out to 13,000 people, as well as some of the other websites. But BizBuySell does a really good job of measuring what's going on in the marketplace, in the buying and selling marketplace. So they as it says, I mean, they polled nearly 3,200 business owners, and so 20% of those business owners closed their doors, and 32% were suspending operations. And I think that's consistent across the board. What we saw, again, it's back to pumping the brakes and letting the dust settle. What we also found was that there's a high demand for those booming businesses. And what that means is, those companies that have withstood, the pandemic, or perhaps even thrived during this pandemic, there's a high demand for that business. Now, the next question everybody asks is there a premium for that business? Well, and I've been getting it a lot, and it just depends. It depends on what you're serving, who you're serving. I was talking to a company the other day that that they're serving they're in the medical field, and they're a injection molder, and they're servicing, they're part of the downstream supply chain for masks. Well, of course they're booming. Um, so at any rate, it depends on what type of business, but but there is a high demand for the booming businesses. Now, is there a premium? It just depends. So, like I said, 66% we're looking to buy this type of business. 44% we're searching for a business that's growing, and that's normal business valuation talk. You're not buying a business, with the intent to just keep it as is. You're buying a business, or the buyer is buying a business with the intent of growing that investment. So, no surprise here. So, I pulled this quote. Um, if your goal is to buy a business that has been profitable during the pandemic, you're going to pay a premium for the reduced risk. Now, again, it just depends on the type of business. The business is withstanding a pandemic after all, so it should be good to go moving forward. Again, just because it is thriving does not necessarily mean that the market will warrant a premium. Um, it really depends on the type of business, because every business has risks, and the risk that has enabled the business to thrive in this marketplace, it may be entirely different after this thing passes. So again, take that with a grain of salt, but I do think that from a marketability standpoint, you'll find that there's a lot of activity for those businesses that are in pointed up in the right direction. So this next thing is that the buyers want to acquire the dip. The dip meaning, all right, so the business took it on the chin. So 59% of the buyers would consider buying a closed business. On our podcast, I don't know, a couple months, maybe a month ago, I had Tim Roy from Capital Analytics, and I had Matt Gallivan from NJ Gallivan. We talked about equipment values and buying closed businesses, and there is a market, and the issue as far as this 59% of the buyers, it's suppressed value. I mean, it supply and demand. The more businesses that close, obviously the value gets suppressed and the value goes down. So 81% would consider a business that's remained open but has been negatively impacted. We've seen that in our activity at the shop. We have buyers are actively searching, and this is a good thing, because again, I think, and what you'll find if you're sellers on this call or your business owners on this call, the biggest thing that I want, well, one of the biggest things I want you to take away is that, in recession times, or when the economy is down, or when employment's up, buying businesses is a real good thing, because people are if they've been negatively impacted or been displaced, they want to find an earning stream, and they can buy that earning stream through acquisition. So this is that we're seeing the same thing on that 81%. So 28%, however, are actively searching for depressed businesses to hold until conditions improve. I don't really have a comment to that. I mean, we always have people that are fishing on the bottom just to find businesses that perhaps they can add their secret sauce to, and make it into a better business than what they acquired. And again, that's not a surprise. Okay, so the market outlook. Um, you know, when you look at the grand scheme of things, it's only an 8% drop for businesses listed for sale on BizBuySell. That's not necessarily a big surprise. I mean, I think that, I hope you take that from my commentary today, is that most of this stuff is not a surprise these days. As far as going forward, we would expect that there would be more people pumping the brakes and not putting their business on the market. We've got and as it relates to us, we're seeing the same thing. We've got a lot of people in a holding pattern that are just letting the dust settle, catching their breath, trying to figure out, what's their next step. And I think that's across the board. Okay, so 16% of business owners plan to exit their business earlier. Again, I think there's some that have withstood this and said, you know what, this is I'm not certain my heart can take it, or my pocketbook can take it. So that, again, not much of a surprise there. 20% plan to exit later. A lot of people that we're seeing, and especially, just recently we added a fellow by the name of Jeff Farron, who's one of my value builder colleagues, and that's what we do. He works on value growth, how to build value in companies, and a lot of these people are doing just that. They're like, all right, I took it on the chin. I now know some risks in the business. How do I build it and fix it and prevent and mitigate the risk going forward? So that's where that 20% comes from. Now the 61%, they're not changing any of their timeline. And the funny thing you'll see in a future slide, most people that are putting the business on the market is retirement. And so this isn't this, the baby boomer generation, this doesn't surprise me. So they're sitting there saying, yeah, I'll sell when I'm damn well ready to sell. And that's what we're seeing, is they're going to retire when they're ready to retire, and not a minute sooner. So again, 61%, no change. So 28% of buyers are newly unemployed. Again, that's what I was alluding to earlier, is that there is a lot of people that are out looking for deals that are replacing income, perhaps from displacement, perhaps just because they were making a couple $100,000 before. Now they're making, I think I talked to somebody that went from a couple 100,000 to 70,000. Well, he feels as though his standard of living is different, and he wants to look and find a business that's more suited to his economic desires. So there's a lot of buyers out there looking for deals. So as far as valuation, our shop has always offered valuation. That was one of the strategies that we had, is we believe that educated business owners make the best clients, and we've always embraced value. That's what we have to do, is help business owners understand value. We have two or three different paths that a business owner could take to understand their value, and again, that's probably one of the biggest differentiators that we have, is we spend an awful lot of time trying to make sure everyone, before going to market, understands how the market's going to react to this particular investment. And regardless of who you're working with in our shop, everybody can get you to the right place to get you the right information. All right. So Q2, small business values. So this bid-ask ratio is what you put the business out on the market for versus what it's sold for. And this is fairly consistent. We always say, you're probably going to get, a 90% of your asking price. And again, this is an attribute of better valuations. People that go to market understanding their value, their businesses will sell. And so it's just a matter of, there will always be some negotiation in there. And so again, I think real estate tends to be about 98%, this as a average. And so, at between 90 and 92% is the same thing, what we would expect. So the median sale price saw a 6% increase over last year. I think the deals got started in early 20 or late 2019. And and I've said this on these webinars 100 times, that it takes between 6 months and a year to get a deal done. So the 6% value increase, I think that was imputed before the pandemic. I think that deal was on its trajectory before. Now we're getting market data as part of the end of it. So I'm not certain I would go. I'm not certain. The takeaway is that this is, my business value inherently just grew by 6.1%. I'm not certain you can take that. So take it. I want you to be aware. That's what the data says. I'm not certain I agree with it, but that's what it is. Let's see. Buyers are really seeking security in low risk businesses. Imagine that the business buyers out there are looking at trying to mitigate their risk in any way, shape, or form. Some do it in purchase price, some do it in transition. But at the end of the day, this is all about risk. I mean, and I've said it again, valuation is about earnings, risk, and growth or expectations. Those are the three components to it. So when you're a buyer, and one of these days we will have we'll start doing more and more buyer webinars where when you're a buyer, you know we tend to talk more people out of business than into business because they just don't understand what it takes to be a business owner. And for you business owners that are on the call, I mean, the sacrifice that it takes in order to be a business owner. Someone coming from corporate America where, I work my 8 to 5 and I clock out and away I go. The idea of that they're CEO and head janitor, that's a different mindset. And so again, this is about risk, and and that's what we do on the backside of our shop is, when we're working with buyers, that's what we're trying to do is explain the risk associated with the opportunity that's being put in front of them, meaning your business. Okay, so let's talk a little bit about some of these deals. So 36% of deals had been delayed, 16 had been canceled, and 40% remain unaffected. And I said the same thing with our shop. Most, in fact, we're substantially higher. We did not see a whole lot of attrition in our deals. So of the Main Street transactions, 24% were expected to be delayed up to 45 days, 21% were expected to be delayed 60 days, and 26% were facing 90-day delays. And then whose fault is that? 44% is the buyer, 26% is the seller, and then 24% is bank financing. So when's the fog going to lift? Well, we've got a number of things that we have to consider. I mean, regardless of where you sit in the general election, when there is a presidential election out there, there is always some holding your breath. What's going to happen? So Q1, Q2 of 2021 is what the survey said. I tend to agree with it, but again, I think a lot depends on, number one, this next round of stimulus. Whenever Congress can agree, I think that once we get that, there'll be more. I think business owners will feel a little bit better of what access to capital, what's going to happen, with their business, so they can start planning. So again, if I'm you, you look at Q1, Q2. Okay. If you're thinking about selling your company, however, that's a different animal, because you got to remember it's a 6 to 12 month ride. So you're really planning 6 to 12 months out. So take that and use it in your decision making, because one day, and I think I talked a little bit about this a couple webinars ago. You have the preparation for sale, then you have the actual sale process, and then you have the transition afterwards. So again, it may take 6 to 12 months to sell a business, but it may take 12 to 24 months in order for you to be totally exited out of the business. And again, it depends on the business as far as transitions go, but nevertheless, you should anticipate that it's going to be a little bit longer than what you anticipate. Okay. Sorry about the slide. So COVID impact on businesses for sale. Again, nothing that really really surprises me here. We were temporarily closed to, went from 35 to 13%. That was the biggest takeaway, and that we were, back to full capacity at 26%. That was the good thing out of this slide. So multiples, everybody asked me, and again, take this with a grain of salt. This is not, make sure you know what you're doing before you start applying these multiples. What I want you to see here, hopefully you can see my cursor, for the first time ever, this is dipped below, and this is Q2. Don't sweat that this is where it's going to land at the end. But for the first time, those deals that are getting done, and they're at one, an SDE stands for seller's discretionary earnings, as defined as net income plus interest plus depreciation, amortization, officers comp in all forms, and any direct and indirect compensation that may trickle into your operating expenses. So you're looking at 1.8 for those businesses with revenue of less than $500,000. From $500,000 to $1 million, it's 2.8. And so you see, here's, we're at 2016 levels. So that bumped up a little bit, as well as the $1 to $2 million range that is has stayed consistent. Same thing on down here on the larger businesses, the 2 to 5 million. The EBITDA multiples are 4 here. So it has held its own. And then the 5 to 50 million has decreased a little bit from 5.9 to 5.5. So what I want you to take away from this slide is the cash at close, and it in our available for acquisition webinar that we'll have that we have had the last couple months, and we have at the end of this month. We have one of our primary lending sources, John Randall from Live Oak Bank. He comes on and he helps us secure capital, and this is a reflection of the cash at close. All the business owners want as much cash as humanly possible on the downstroke, and they should. But what I want you to see is that you're looking at anywhere from 80 to 80 to 90% down at closing, and so there has to be some level of financing, because it goes back to risk. So business owners, or business buyers, I should say, are trying to mitigate their risk. And I was just in a meeting last night that a buyer, certainly able to pay cash, did not want to pay cash because they were afraid that the business seller would go away and would not provide the training transition. So that's where you see this seller financing come from. Earnouts are if then financing. If something happens, then I'm willing to pay over and above. And then this retained equity, I have to tell you, in our shop, I have not seen any kind of retained equity. But as I said, this is the statistics from BizBuySell. Okay, so why are owners selling? This is the biggest takeaway I alluded to earlier. It's all retirement. Look at all regardless of the level, retirement's the number one reason by far. So who are your buyers? Under $500,000, it's first-time buyers. They're buying a job and they're within 20 miles of your location. Between $500,000 and $1 million, again, first-time buyers buying a job within 20 miles of your location. $1 million to $2 million, first-time buyer buying a job within 20 miles. The 2 to 5 million, first-time buyers motivated to buy a job, located again within 20 miles. The 5 to 50 is when you move into your private equity groups or strategic buyers. And so again, they're professional buyers. They are looking for management teams. They're coming in, either deploying their own or using yours. And they're looking for add-on acquisitions. They're looking at either going horizontal or vertical in their acquisition strategy, and they're typically located more than 100 miles away. So what are they buying? Under $500,000, you're at a lot of restaurants, believe it or not, business services and professional services. The 5 to $1 million, consumer goods and retail, I have to tell you, I have not seen that. Normally, retail has been, I don't want to say stagnant, but retail is hard, especially if you're in the space where you're competing with the Amazons of the world. That's a real tough spot. But at any rate, so you're looking at 29% there, 13% in healthcare, and 13% in business services. 1 to 2 million construction, personal services, and manufacturing. 2 to 5 construction, consumer goods, and business services. And then 5 to 50 manufacturing, consumer goods, and business services. So as I was saying, that this is, and again, this is pretty consistent across the board that we've seen in historical what are things selling. All right, this is coming from Deal Stats. Biggest thing I want you to see is this dip here. I mean, from 4.7 to 4.4, and that's fairly consistent with the two publications I went through. So I'm not certain that should surprise anybody. So now the questions. So how's the industry multiplier determined for the valuation of the business and the effect on the pandemic on the multiplier? So the multiplier, otherwise known as the multiple, is get this out of the way here, is risk. So the inverse of a multiple is a discount or capitalization rate, which translates it into the return on investment. So the multiplier is determined, at least in this form, on the number of deals done. It's compiled. Like when I say you have a 3 multiple, I'm looking at market data. And when I say market data, I look at BizComps, deal stats, done deals, merger stat, value source. I'm looking at all these different places, and I'm compiling all of these multiples, and I'm coming up with a number. Well, I shouldn't say a number. I'm coming up with a range of multiples to say, okay, this is based on the merits of this particular business that I'm appraising, and the composition of the marketplace of what's sold. Theoretically, the behavior toward this business is going to be the same for them. So I take all that data, and again, these are based on done deals, and I apply it to that business. So hopefully that explains as far as how a multiple is determined, and then the effect on the pandemic on the multiple. Again, you saw that there hasn't been a whole lot of change in risk or change in the multiple. What's changing is how businesses are being paid for. And again, everybody understands that the pandemic is the pandemic, and how am I going to pay you the value if your business doesn't come back? And that's why we're seeing a lot of structural changes in the transaction, where look, either I'm going to escrow some, I'm going to do an earn out, I'm going to do some if then financing. If this comes back the way you say, Mr. Seller, I'm willing to pay that value. If it does not, the value is not there. So that's what we do there. The effect of the pandemic, again, I have not seen real big changes on the multiple. And I say that, if you start looking at hospitality businesses, restaurants and such, certainly, it's hard to be closed for 4 months, or taking it on the chin, month after month, and expect to yield a premium. That one's hard. But again, the problem you have is going to the market. I mean, you go to the market, and the market's going to tell you whether or not there's merit to it. But now I also want you to understand that when we're looking at market multiples and the earnings of a business, because that's what you multiply. You take your earnings and you apply it or multiply it by the multiplier in this case, and that renders a value. Well, as you're what you need to consider is the earnings. If the earnings aren't there, those earnings pay a salary to the buyer, it pays the debt, and it gives a return of and on the investment. If it doesn't have it, we're dead in the water. Because people, especially in this current environment, it's hard to warrant that level of risk when you don't know what's going to happen. Okay, so are there businesses that are receiving less interest seeing lower multiples? I continue to say it. I mean, it's a function of price. If your asking price is out of line, you're not going to get a lot of activity, and you keep on ratcheting the price down, until you start receiving activity, because the market is the market. The market's the most perfect way to determine value. So we're seeing. Let me back up a little bit to what we're seeing. We're seeing lots of buyers, and we're seeing our greatest challenge right now is inventory. We need more businesses, and because there's a lot of buyers looking for a lot of different deals. Now, you can argue there's supply and demand matters to contend with, that my business should command a higher price if you have that many buyers. Again, maybe, but the biggest issue that we have to contend with is making that financial deal work, because again, people are not making dumb decisions, and what you'll find is the bank, the accountant, and everyone downstream in the deal is going to put their 2 cents in on the financial merits of that acquisition. So because a business is seeing less interest, it's not necessarily, I guess it would be lower multiples, but again, good businesses priced well will sell. All right, so where should I start when thinking about selling my businesses? I know an exceptional business brokerage that you should probably call. Having said that, I think you should, if you're not ready to make that leap into talking with someone, we have a number of white papers you're welcome to. My podcast, Defenders of Business Value, will give you a real deep dive into risk and business and sales of businesses. I think I would be careful about letting Google drive your exit. I think you should talk to somebody, whether it's your accountant, probably a broker. Most professional brokerages, if they're doing the business right, that conversation is in total confidence. We understand it's a long sales cycle, and that's a good thing. In order to have an effective sale, you need two things. You need motivation. Why are you leaving the business, and what are you going to do? So you have to have the right motivation. And then the other component is value. Does it financially make sense for you to put it on the market? Because if there's a value gap, all right, well, we might be able to help you fix your business before you hit the market. So again, we have been around for 40 years, and we have been, in my mind, we are the most generous brokerage out there as far as sharing information. And regardless of whether or not we have to turn a meter on, we are more than happy to share that information with you. So either reach out to me, you can reach out to me on LinkedIn, or through this through the webinar, and I'm happy to get you whatever you might need to help you down this path. All right, let me see if I have any other questions. Ed. Yeah. Question: will the PowerPoint be available? Yeah, it absolutely would. So or will. So let me close up with a couple things. So the three sources I used were BizBuySell, M&A Source, and Deal Stats. These are all the premier places for data. So I hope if you need additional information, we certainly can get that to you. So if there are no other questions, I'm going to wrap up. Chelsea had asked me to remind everyone that our available for acquisition webinar will be in 2 weeks, same day, same time, and she will have a link in this follow-up webinar email. So I hope you found this information interesting and meaningful for you wherever you are in your evaluation of an exit. If we can help you, or if you know somebody that we can help, I would love to talk to them. So have a great rest of, well, I guess we're coming to the weekend. So I hope you have a great weekend, and I hope you stay well. So that's it for us today. Thanks so much for joining us.